What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is December 22nd of 2023. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I want to spend some time to talk about some of the major rotations that are going on in cryptocurrency markets right now. We're not only going to analyze Bitcoin, but also dive into the altcoin space, talking about some of the biggest altcoins, as well as some of the meme coins that have been trending. But beyond all of this, I want to step back in the big picture as well, because it's easy to lose sight here of what's really going on behind the scenes and what we're seeing in the price action. And while I'm definitely someone who's driven by price action as a trader, I'm not going to get sidestepped by what's going on in the fundamentals. We got a lot to unpack here in today's video, so if you guys happen to enjoy it, consider dropping a like, and let's go ahead and kick things off. So I want to start here by diving into Bitcoin. Again, so far bulls are in the lead here. We're seeing some struggle here in price over the last 3 days to get above and set new relative highs, but we aren't seeing a major fade either. We're well and elevated above the 21-day. So far, Bitcoin's doing fine here at the moment. And again, as we've echoed here on this channel, while again, we don't believe we're in a new full swing bull market going to new all-time highs and breaking towards six-figure values, we think that there's a possibility here going into January that we could get that prop up from 48 to 52K. That's still the target here. It's either that or we continue to see whether or not it can hold in the 21-day. If you get that breakdown, you get a good chance for this as the 200-day is coming up to get a nice discount opportunity in the mid $30,000 range for Bitcoin. So again, we're going to see how that plays out here. We just got to wait and see what price is telling us. If you get that breakout above the relative highs, you've got a nice risk reward setup trade towards that range, albeit it's a short-term one. However, I want to spend some time to talk about the last 2 days in altcoins. We had a 4% move the other day and another 3% move the day prior, but altcoins, especially those in total 3, so we're excluding Ethereum here, are starting to look a little bit overextended, and I'll explain. As you can see here, any time that we usually get far and extended away, these huge gaps between the 21-day and price, especially in a short window of time, and with not much follow through afterwards, where you start to see some of those profits being taken, this to me looks like we're very much overextended here. And this comes at a time where total 3 is hitting right around $500 billion. So this is a big psychological barrier here, especially considering the rally we've had here in total 3 over these past few months. And if we go all the way back here again towards those absolute lows, we're talking about a rally from roughly around 300 billion to 500 billion. So not a full 100% move in total 3, but a substantial one nonetheless. A massive acceleration here in some altcoins, especially with the advent of the rebound in some of the alternative L1s like Solana and Avalanche, which we will talk about. But outside of that as well, mainly and a lot of new plays that have been making much more significant gains, like the Bitcoin infrastructure plays we've been discussing on this channel. And outside of that as well, some meme coins out there in the market like BONK. Now, I want to talk a little bit about that because there's been a big focus on a resurgence in the Solana ecosystem. And as I mentioned a moment ago with total 3, when you get these rapid extensions, we had 2 great days here for Solana at 12 and 14% move on each daily candle respectively. Definitely great move. Those who have been long on the Solana trade have made some solid money. At the same time, we've come up here and hit towards a big even level around $100. And this chart does not look very pretty here if this daily candle doesn't start to hold out here. If we start to fade and engulf a lot of this candle from the other day, especially being this extended away from the 21-day, it's not a good risk reward setup. And if anything, looks like a period of time where people could be taking some significant profits here, especially when you consider all that's going on with the FTX bankruptcy. I would not be like getting too risk on here with some of these plays. And outside of that, you already had some signs a couple days ago with BONK really fading off a lot of its gains from the top and starting to signal that it's ready for a correction. It's down about 47% right now from its relative highs. At a minimum, we see this coming down here before it could potentially be a buy towards 56% from the relative highs to that 21-day moving average. It looks like price is pretty much destined for there. But beyond that as well, if we don't hold on that 21-day, right? And again, you got that great risk reward setup here. You can build an entry at that point if you want, because this has been one of the best performers and it has not really come down to the 21-day very much throughout its history. You can basically set in an entry and have a stop slightly below that 21-day. essentially protecting yourself from taking too much losses on. But generally speaking, there is a chance that this could come all the way down here to the 200-day, which is rising up relatively fast for a nice 90 to potentially 80% correction, depending on how that the 200-day moves here. I would say in that ballpark, that could be a really good potential entry point on one of the meme coins, with a resurgence of a secondary wave of altcoins after Bitcoin potentially rallies on up to 48.52K. My thinking here is that we could get a temporary cool down across the board in crypto back to the 21-day for Bitcoin and a nice solid pullback in altcoins. And if there is that resurgence going into further confirmation of the ETF, getting up to that 48.52K level going into the early part of January, then afterwards altcoins could, at a much cheaper discount, start to have one last pump, and then that would be kind of the last move here for some of these plays. But again, what we are seeing here is that while Solana is starting to fade here over the last few hours and give up a lot of those gains as it went up towards that big even level, we did see a pretty strong resurgence here in Ethereum's price. About a 3.6% move against BTC, 1.2% move. And I understand that's not as sexy as what Solana's doing, but by market cap terms, that's a massive move for Ethereum to make here. Now, this is again coming off of a support range that we saw back in June of 2022. This is a level that a lot of people, including ourselves, have been watching. But I think above all, this is going to be a short-term move for Ethereum, potentially up here to the 200 week. As we can see here on Lux Algo, the trend after the longest period of time here, I'll go ahead and turn to the regular scale here. You can see the trend has been basically positive. And you can see back here throughout 2018 and 2020, Lux Algo on the weekly time frame, which again, I think is a much more powerful time frame to watch if you're swing traders like us, if you're looking to trade those big moves and make hundreds of percentage gains on single trades. Then you got to be watching the weekly time frame, and you got to be using these kind of trend indicators like Lux Algo. So here on the weekly, it was just showing for the last couple of years every single time you needed to accumulate. But when that trend snapped here in September 2023, as we've discussed here, we've been pretty much bearish on Ethereum against Bitcoin for the last year and a half. But as we went through here and got a confirmation here on the weekly, and we're down below that 200-day moving average and the 200 week. This is your signal, guys, that any strength you see in Ethereum, 10-15% move, is to be met with more bearishness. You need to be bearish on the trend. Take advantage of that relief rally and either lock in gains that you've had on Ethereum for a long time if you've been holding it forever, or mitigate your losses, close out of positions, or even consider shorting on some of these plays. I really I'm quite serious on this, guys. I don't think the trend looks nice for Ethereum here. We already broke through the ascending line of support right back here in October, and that is a part of a monumental shift here in the altcoin space against the broader performance of Bitcoin. On these pullbacks, we're not seeing people so willingly paying a premium for Ethereum, for Binance, for XRP, as well. In this case, I think one exception would be Solana, but we're going to see, again, Solana doesn't have the price history here of Ethereum and so many of the other cryptos we're tracking that have been around for 6+ years. So again, it's a bit of an anomaly here, but we're going to have to see how Ethereum reacts with that 200 week moving average, as well as the 200-day crossing through that for the first time in a long period of history. Now, one big thing I wanted to let you guys know about, again, if you're interested in checking out these indicators, Lux Algo, practically on the weekly time frame, told you exactly every single low on Ethereum. I think that's a really good thing to bring up here against BTC. So these indicators can be incredibly powerful to let you know of good accumulation zones, and also when you have trend shifts, potential ranges to take profit and expect further price to the downside, maybe even finding good shorting opportunities. If you guys are interested in getting these trailing bands that come with one of the main Lux Algo indicators and the whole suite of other indicators that we didn't even cover here in this channel, then I recommend you guys check out the link down below in the description. If you use our link, you can get 35% off on the holiday sale that they have going on right now, but you got to be quick. Those discounts are closing up here as the holidays are coming to a close. So I definitely recommend, if you guys just want to give it a try the monthly, or you can try a quarterly package or annual. For me, it's one of the few indicator suites that I personally like to use out there in the market, but unlike a lot of people who use them in the shorter term time frames, I like to do the longer time frames and use it on mainly like the weekly or monthly time frame, especially when we're talking about equities. Again, you can use it across all markets. Definitely something to add to your arsenal when it comes to the long-term trend. And outside of that, there was also one other chart here that I wanted to showcase here. You can see here on the daily time frame as well for Lux Algo. Very similar patterns as well to the 21-day, which we like to use, but generally even better here at finding those real opportunities where price actually bottoms, right? If you would have bought at the, say, 200-day here on Total 3, it'd be around 400 billion, but down here, where we actually started to get into the band, that's where we found our lows. Same as back here on December 18th. So definitely interesting stuff here when it comes to the Lux Algo indicator. But I wanted to again echo here, well, Ethereum, while it's definitely trending up here, it's definitely getting some of the benefit here. Some liquidity rotates from Sol into Ethereum as Solana and Avalanche and so many other plays are a little bit overextended. I am again going to be watching how this reacts with the 21-day moving average. We've had some periods of time where we're dipping below quite steadily against that the 21-day EMA, which isn't signaling a lot of confidence to me. I'm watching alternative meme coins as well that are much smaller than, say, for example, BONK or Doge. I'm watching plays like Bob as well, which are coming down. I've had a nice cool down already. I think already over 55-60% pullback from the relative highs. You have at 57.5% now. We're expecting this is going to come in the 21-day pocket here, consolidate for a bit, potentially have a big cup and handle breakout. Again, the market cap for these plays are much smaller, and that's where investors, especially the retail liquidity that's been driving these moves, are going to be looking for. So again, keep an eye on that here. And this brings me to actually talking about the big picture stuff, guys. We talked about altcoin markets. We talked about all the exciting stuff going on in the near term. But I think a lot of people, again, are unfortunately going to get caught up in this short-term micro mentality of what's going on in crypto. And they're going to lose sight of the big picture. And if you lose sight of the big picture, guys, it could end up eating a lot of those returns that you might be making right now. We have to stay focused on the macro as well. We have to counterbalance not only our optimism and excitement for these short-term moves. Now, I know some of you out there have traded altcoins, far outpaced Bitcoin for the last year. You made some phenomenal returns here trading on some of these altcoins. But at the same time, the market will not only give returns, but it will take them if you are not cautious and protective of your capital. If you don't know when to step away from the poker table and walk away with your winnings. I want to spend some time to explain why this chart is significant to keep on your radar here, guys. Because I know a lot of people feel that we've entered a soft landing, that everything's going to be sunshine and rainbows, and we're going to go back to good times. Folks, if there's one thing I can tell you, it's that if this yield curve is so uninverted as it is right now, it is as uninverted as July of 2000, the peak of the dot-com bubble. It's as uninverted as it was in February of 1989, and it's worse than where we were in December of 2006. I can tell you guys, there's no such thing as a soft landing. That is the same narrative that was touted back in 2006, and maybe through various other terms, was utilized in order to have investors become complacent in the dot-com bubble in 1989, in any typical recession that we enter into. And I'm not here to say today that it's going to be worse than 2008 or it's going to be as worse as the dot-com bubble. I don't know exactly how bad the recession could be. I don't know how much the economy is going to see a contraction in GDP, and more particularly in our focus in asset prices, how much we're going to see a pullback. But what you are seeing right now is a short-term window of relief and upward pricing of assets. But it is a short-term blip in the long-term trend that is coming in the next year. And I know there aren't many people telling you that here because it's not a popular opinion to have right now. And it's not a very comfortable one to have when you see the market popping off the way it is. I understand as much as the next guy. There are short-term opportunities. We're talking about them here in the channel. We talked about ordinals. We talked about stacks. We talked about a lot of the meme coins out there in this market that have been bringing in some sizable returns. But if you take a look here, that blue line, when that 200-day starts to curve up, which it already has here, and when price is finding a foundation on that 200-day. We saw this here as it stopped acting as resistance and turned it into support in May of 2007, or here in November of 2000, or here, for example, between 1989 into 1990. That is when the majority of returns for the last decade, 12, 13 years, whatever you want to point towards, during that period of time where asset prices did well and pain started to come. This is why I've echoed on this channel here about preservation of capital. There's no one on YouTube that I've seen in the crypto space that talks about preservation of capital. Like, for those of you, I know many of you are not newcomers here. There might be some of you who are newcomers, and this is even just as applicable to you, but if you've really been in crypto and you've made sizable returns over the last decade, don't let someone rob you of that. Don't let some short-term hype narrative lead you to be a bag holder in deadweight positions that have no fundamental value other than their speculation value that is derived from hopefully being able to sell it to somebody who's willing to pay a higher price. And if you don't believe me, just take a look here at where we are in the asset premium versus global liquidity. We're right back where we were, even higher than in November of 2021. We're at a higher premium in the NASDAQ than we were during the mania, where there was so much money printing, so much craze, so much excitement, so much retail traders coming into the space. You have to be an idiot to not make money during that period of time. Like, it was so easy. And now we are at that same risk premium, if not higher. But what are the fundamentals looking like across so many of the alternative cryptocurrencies that have been leading during this period of time? Again, I'm not here to say that fundamentals directly correlate with price. I'll be the first to tell you that's not the case. You can have major short-term waves of speculation, as we talked about here in this channel. And it's okay to trade those. If you want to take the risk, that's all good. But I bring you all back to reality here because there's a lot of people promoting that there's new narratives or new exciting developments going on in so many of these protocols. Really, take a look at one of the most basic metrics here, stablecoin liquidity. If there are new use cases, there is bound to be a demand to some extent for stablecoin liquidity. Right? If you think about DeFi, even if you think about GameFi or all the other potential narratives that people could be promoting, even meme coins, if that's the narrative you're going for, you need stablecoin liquidity in order to swap to these plays. And a larger amount of stablecoin liquidity when you're trading these things at much higher valuations. Well, we can see here since December 6th, stablecoin liquidity has gone from 1.5 to 1.78 billion. There's been a $200 million increase in the amount of stablecoins on Solana in the past few weeks. Sounds like a lot of money for an individual, but when you take a look at the network and where it was before, $6 billion. And the fact that this is just like a blip on the map, it's nothing. How can you continue to justify over the long run paying $100 per SOL token? There's not much going on here, guys. Core developers, as we talked about before, right? No one's contributing. No one's building anything that's lasting. So all you've got is speculatory value. And speculatory value can go on for some time. It clearly has here for a lot of 2023. But you're going to need lots and lots of liquidity to keep that going into 2024. Avalanche as well. I mean, just abysmal. No acceleration here in stablecoin liquidity. Stuck at $1 billion. Lower than where we were back in July by $300 million. Core developers. No significant upward trend. Definitely not looking as bad as other networks, I'll give it that. But no serious trend. And to be fair, Ethereum is not much better. We've said it here in the channel, guys. I was a big ETH bull in 2018. We were one of the few people calling to buy ETH at $80 to $100 during its pullback in 2018, 2020. One of the few people who were really bullish on DeFi in the early stages. We were heavily invested in DeFi. And look at the stablecoin liquidity here. Absolutely flat. No acceleration like in 2021. No acceleration like in 2019 or 2020. A lot of people are going to get chewed up. It's not about how many opportunities you miss. It's about the opportunities you take that unfortunately leave you losing everything. And when I take a look here, again, great example here of Lux Algo. Can be a great ally here in trading, catching the majority of these moves. We are far away from that Lux Algo support band on the weekly time frame, right? And this will help you capture a majority of those moves here, right? Letting you know when to take profits. Also, along with that as well, when to maintain long-term shorts and longs, right? And we can see here Lux Algo has been providing that bullish support here. We got that bounce there in September, and once we broke through those relative highs, it was clear that this could possibly go on for a little bit longer. As we talked about here in this channel, right? We talked about that as much as we believed that Bitcoin was going to hold out here and move down to the downside, we had that support come in, we broke to new relative highs, and since then, Bitcoin's been charging forward, and that's where the majority of altcoin gains have been made. Right? And that's why we're very confident here about waiting for the right signs. But at the same time, you also got to know when to take profits, when to not get too greedy, and ask the question of whether or not when this does pull back, whenever it does, is it going to be able to hold that support band? Or is the trend going to start to flip red? Because if you've been holding your positions the entire time, especially in the altcoin market, you won't just be down, say, 47 or 50% on plays like BONK. You could end up losing 80 to 90% if you bought in on the later stages here. Don't get caught in a trap, guys. Don't be a part of someone's distribution play to sell off massive positions on unknowingly suspecting retail investors. There's not enough people who bring us back down to earth, I think, when it comes to crypto, and I hope, if anything, my content here can help you guys with that. Some may say the macro doesn't matter here. Some may say even this kind of microanalysis of fundamentals doesn't matter. It eventually comes to roost. The chickens will eventually come to roost if you continue to buy into the narrative that this time it's different. I'm all about trading altcoins, guys, but we gotta wait for this to probably cool down or have a more substantial correction before things start to get interesting. So, I rambled on a good amount here today, guys. I hope this video proved valuable for you. If you want to have an understanding of just kind of a quick summary of all the things we discussed here today, the trend is still strong on altcoins, no doubt about that. There's going to probably be some major rotations here over the next few days. So keep an eye on what plays are holding strength at those 21 days where maybe others aren't. And also as well, be cautious. Don't be bag holding if at the 21 day you build some entries that start to really go south below that indicator. Have some stop set so that you're at a reasonable risk level towards your potential reward, maintaining a good risk to reward ratio. And outside of that as well, when it comes to the macro, don't get lost on the big picture, guys. If this starts to shoot up, right, you can see a direct correlation with the performance of risk on assets. We can see here in March, assets flushed out, they went down, yield curve spiked up and uninverted. But from March onward towards July, we had a continued rally in risk on assets. That includes Bitcoin, stocks, you name it. And then here between July and October, that was also in equities, and a lot of risk on assets were correcting and taking more bearish tone. Keep an eye here on this 30-day, the yield curve. The uninversion here, when it goes up, is usually when assets are moving down. And when it goes down, you have some relief periods like we've been seeing now. So it has an inverse correlation here between asset price performance in many ways. Similar to how some people correlate the dollar index to Bitcoin, you name it. So that's it for today's video, guys. As I mentioned, I rambled on a good amount, but I hope this proved valuable for you. And if it did, consider dropping a like. It's a great way to support the channel, guys. And outside of that as well, if you guys want, you can always check out the Dash report down below in the description. It's a great way to get our broad analysis on the market. We've had a lot of people signing up as we are giving people the opportunity to grandfather in $240 annual subscriptions to the newsletter. It's less than a fraction of a cup of coffee a day, especially if you're drinking Starbucks coffee. And the thing about it is that we've kept this price the same for the last, I think, 5+ years, since back in 2018, since we launched the newsletter. So we're at the point where we do need to raise prices in order to continue doing it. So if you guys want to be a part of the Dash Report community, we've got over 1,000 members globally, a lot of really powerful players from our community that are in there sharing trade setups. It's not just me in there, but a lot of other great people. And if you guys want to be part of that and get access to all the different offerings, I'll leave a link down to our website down below in the description, to nicholasmerton.com. And you guys can also check out Lux Algo as well if you want to subscribe to that. But both great ways to support the channel. Hope you guys have a wonderful rest of your day and a wonderful rest of your weekend. Have a great time, guys. Have some time away from the charts. Enjoy time with your family and friends during this holiday season. Hope you guys have a Merry Christmas and Happy Holidays. And I'll see you guys on Monday at 6 a.m. Eastern Standard Time. Take care, everyone.